Hi Bongani, welcome. Good afternoon everyone. Welcome to today's live session. Can you hear me loud and clear? Alright. So how are we doing? Are we winning? Hi Chris, hi Tembi. You're all welcome. You're welcome, welcome. So as we can see here, NAS came to a narrow state, and as the market opened, went up and then gone to the Y states, on its way to the Y states. So this is where we would have taken advantage of this trade, even though it was in the open US open time. So sometimes it's good, not sometimes it's good to kind of stay on the side if you're not very used to trading the market open. It's better to stay on the side and wait till things settle down before you get into trading. Other than that, it could be drawn out. Alright. Okay, so this is NAS here. Let's see what US 30 has got for us. So you can see US 30 went up as the market opened, and NAS came down. If we look at the higher time frame to see what the broad view is looking like. So as we all know, they're all in their wide states. This is their narrow states in the wide state. So if they get a chance, they'll be dropping. Looks like NAS is in that groove now. Looks like NAS is in the dropping zone, but you never know, it could be until here, then it pushes up again. So we'll just be on the watch outs. So we go back on our smaller time frame, our trading time frame. So currently price is below the moving average, below the 20 moving average, below the 200 and the 50 EMA. So on that note, if we get price getting close to the moving average and gives us a setup, we could look out to sell if you're not already in this sell trade from here. So in a situation where, let's say you have a big candle like this going up, purple candle or red candle coming down, so you may ask, when is the ideal time to get involved with this kind of big bull candle? So what I do is I wait once price has covered halfway of this big candle, then I can look for an entry on it before it finally drops. So let's say you have something like this. Oops, what am I drawing? Delete. So what I was saying is, once you have a big candle like this, then you're looking for an entry. With our setup, you have to more or less wait until price take out this candle here. But if you consider that, and then your stop loss will be far wide apart. So once the purple candle eliminates halfway of this green candle, you can put your entry in. Other than that, where we have shorter candles and being taken out by the opposite candle, that is fine to get in. But in a scenario where you have a big candle like this, that's what I'm trying to put across for us to understand. Okay, so let's see what we can find. Nothing yet on NAS at the moment, as the move has already pushed further down. We don't want to enter into the trade when it is in the wide state. We enter the trade when price comes nearer to the blue line or the 20 SMA. That is the ideal condition. That's the ideal condition. over here we can see US 30 got below the moving average and got taken out by this candle. So as NAS is selling, US 30 is on the bull side. It's above the red line, which is the 200 moving average. It was above the 20, now below. So at this point in time, we could look to enter. The ideal place would have been here, but as again, it's also above. So the best or the ideal condition is for, if we are going to sell, for price and the moving averages to fall below 200. So currently, as it is now, it's more or less in the buy zone. It is in the buy zone. So I'm sure as NAS has made its way down, I'm sure US 30 will also follow suit. US 30 will follow suit. Let's see SPS. Yeah, so it's only US 30 that is up there. NAS and SPS are all below the 200 moving average. So with that said, we'll just look for an entry on US 30 for the sell. So it came to the Y states. So from the Y states, it goes into narrow states. So as the other two indices are already in the sell mode, we anticipate that US 30 will follow suit. So by the time it gets to the narrow states, it might continue going to the south, going down to follow what NAS and SPS are doing. Right. So just wait and see what happens. Let's put some music. Some beats. If you have a pair you want us to have a look, you can put on the charts. Other than that, we'll wait and see which opportunity comes up on NAS and US 30. So just to quickly go over how we trade with this strategy. So so what we do here is, let me take off these lines. So what we do here is, if price is below, if I say price, I'm referring to this purple and green candles on the charts, and if it's below the 200 moving average, this red line, and it's below the 20 moving average, which is the the blue line. Then we also have the 50 EMA, exponential moving average. So if price falls below it and it's below the 200, that means it's in the sell zone. So what we look out for in this area or in this zone is sell. So we look out for sell positions, and we can only take a sell when price come near to the blue line. That's where we look out for an event to enter the trade. So price was coming from above here into this wide state. It came from this narrow state into this wide state and then began moving sideways. So we only take the trade from the narrow states. Now once it gets to the wide state, we take our profits. Then from here, we don't take new positions. We don't enter for a sell here. We only take a new position, or we take sell position when price come close to the blue line or near the blue line. And when that happens, you look out for an event. The moment the purple candle takes out the low of the green candle, you can go in for a sell on this candle. You can sell this. So the same way, once you enter here on this particular candle, your stop loss goes above there. So once your stop loss goes there, you run it until it gets into the Y state. So once it gets into the Y state, you can take your profit there, or if you have two positions opened, you can at least close one and leave the remaining one to run if it continues going down. So this is the setup. This was what happened in the morning, this morning. So as we have also talked about the key levels before, so this is a key level, the 17,550 key level, and price came from this high and then stopped at this 17,550 key level. So that's why I always say we should take the key levels, take it very we should look at it and then make sure we don't just trade without knowing that it's there. We should take it serious, as price respects those key levels very well, as we can all see. So with this move down, with this move that it did in the morning, price stopped at this key level, the 17,550 key level. So whenever you are running a trade and it's approaching any key level, you should either have a plan in place. Maybe if you are in there and you are thinking it's going to push further down, go all the way down. You might be wrong. So it's always good to take notice of these things and then avoid some errors or some avoidable mistakes that can happen. So let's continue. So as I was explaining how we use the strategy to trade, so price always comes from the narrow states. Price moves from the narrow states. The narrow state is this point where you have the price, or the moving averages all together in one location. So once you have this in place, you should expect that price will move from the narrow state to a wide, state. So the wide state also happens to be where the key level is. That's where price turned around and then gave back all the pips it gave earlier on, all the points it gave earlier on. It gave it almost all of it back. So if we look at this, it got to this point where price started. So it moved from the wide state back to the narrow state, and then did a sideways movement there. Did a sideways movement there until the market opened, and then I'll forward it. We'll see what happened after that. So as I said, when you identify price to be in the wide state, you don't continue selling from there. So imagine if you had a setup here and then you sold from here, and you can see the reversal that happened here. So always you have to identify which state is the market in before you take your trade. That will determine which direction you are going. That will make it clear for you which direction you are going. So as I also say that when you are trading, we should trade with understanding. When the blue line, which is the 20 EM, the simple moving average, crosses below the 50 EMA, what is our expectation? So our expectation is we expect price to pull back to the moving average, and that is what's happened here. That is what happened here. Yes, I was in this trade in the morning. I entered, my entries were somewhere up here. So as price pulled, as the moving average crossed over here, my next expectation was, or anticipation was, price to pull back to the moving average. So when all this started happening, this green candle started popping up, I knew that this is pulling back to the moving average as a result of this crossover, and that's exactly what happened. So whenever you are in a trade and then there's a crossover, you expect this to happen. So when there's a green candles popping up, you kind of more or less ignore them. Then after it got to the moving average, see the power that came into it again, push it down. So with this kind of recall, where price is called back to the moving average, it's ideal or perfect when it's also price, the moving average has just started descending or just started going down. In the Y states, you expect differently. So as price came back again to the moving average, it pushed down to the key level and then turned around. So this is an area, apart from your initial entries, this is another area you could take in more positions, add on to your initial positions you took. This is another area where price take out the last green candle. So as we can see, this is in a bear zone. this is the bear markets where price is descending, so we mostly ignore the green candle. What's important in this area is the red candle or the purple candle, as we see here on my chart. So we have to take good notice of it. Since NAS is still dropping, yeah, it's still dropping. Yeah, so compared to over here, and then what it has just done here, it came near to the moving average, just as I was explaining. So over here, as price took out this last green candle, this could have been an entry for us, but I was busy explaining the strategy. Okay, so so this is where price got to in the morning. Then first, this key level where this blue line is, or this blue horizontal line, this is where it got to in the past here, and then reversed. So looking at how important this area, this key level is, it's needed a big candle to break through it, so it's acting as a support. So if it's a strong area of support, you normally have a big candle, bear candle breaking through, or if it's a strong area of resistance, you normally have a big bull candle breaking through to the upside. This one, it's a bear candle, big power bear candle breaking through to the downside. Then from here, the next key level we could anticipate price going there is here, the 350 level, 17350 level. That's the next key level. So on entry here, if price continues going down, this is the next key level we can aim at. Yeah, let's see what US 30 is doing. Okay, US 30 is still pushing up. It kind of formed either triple top, or if we add this together, it formed an M. So with this, it's a retest to the top. So with this, we could look for an opportunity to go down as price has kind of completed this double top pattern. So it's now below the 20 moving average. So if we get a setup here, maybe you could jump on. As I said, the best thing for a downtrend to sell is to have the price below the 200 moving average. So this is kind of you'll be trading against the trend, counter trade, because it's still in the bull zone. Price is above the red moving average, is above the blue moving average. So over here, if you take this, it's just based on the fact that the NAS and the SPS are doing selling, yeah, moving to the downside. So these are indices that normally moves together. So if the first two has gone, there's a high probability that the third one, which is the US 30, will follow suit. So getting an entry here, it could be a high probability entry for you. So at this point, I will just take a position on here, and then we'll see how it turns out to be. The US 30 happens to be a very volatile pair, so we also have to be conscious of that as well. very volatile pair. Volatile pair. So as we can see, compared to where price is coming from, price is being in this area of narrow states. It came from this narrow state, then dropped to this wide state. So we are the wide state is just explained from this red line. We are just looking at it from the red line to where the blue line is. That is a wide state compared to where price and the red line is here. They are together here, almost together. So, and then from here, from the blue line to where it goes to as well, there's some space there as well. So I would say it's in its wide state, and that doesn't mean that it cannot go further down. What that we have to do is to be cautious when we're taking sales from this point on, because it could turn around back to the narrow state before it might drop further. It might drop further. So if this is our next target, it doesn't mean it has to walk. Price has to come in a straight line like this to the next target. Now it could just move back a bit, play around before it gets here. So it doesn't have to be a straight line like this, or it could just come all the way like this. Yeah, so let's be aware of that. If you have a question, you can put it in the chat. Let me have a look at it. So US 30 is still pushing up to the upside. That's SPS, almost the same, doing the same thing as NAS. So it's only US 30 that's doing something different. So if the downtrend persists, if the wideness of the states that they are in now needs to be closed, then US 30 will be following to the downside as well. As we can see, it's in its wide states. From this red line to the blue line, you can see how wide it is, and then from the blue line to where it got to is another space here, so there's a high chance of it coming down. This is the daily time frame, so I normally just go there to just have a broader view of things, but the trading time frame is 2 minutes. As we can see, now it's turned round, pushing up. So that's what I was saying, if you get to a narrow state, you have to be very cautious how you approach it, that you don't get caught up selling from this point on. If you sell from this point on, you might be caught up in the trade, as it might turn out that it's turning around to go back to the narrow states before continuing to the downside if it truly wants to go down. So over here we have this, the last purple candle here had been taken out. It's been taken out. So from this wide state, we expect price to go back into the narrow state before it continues. So if you want, you could take a position on this as it moves back to the narrow state, but you don't have to, because the main trend is downwards from what we can see from here, and what's happened since morning, it's been in the downtrend. This is the red moving 200 moving average, the 20 here, so you can see price has been below the 20 most of the times. Price is below the 20, so it's in a downtrend. With that said, that could yield a quick in and out trade for you if you can do that. If not, just look for sell setups, like over here in the morning, as price broke below this area of narrow states, and then came back, dropped again, and then reversed here. You can see price reversed and then went all the way up. Yeah. So whenever you are approaching the wide states, you have to exercise degree of carefulness. You have to exercise some degree of carefulness, not to continue selling, even though price is not going anywhere yet. Keep on selling. So guys, as I've said before, on our live session here, it's mainly to see how I do things, and then if you get a nice setup, we can hop on. If not, as you go back into your own trading, you kind of wait and then see if you find any better setup to get into it. Yeah, then you take it from there. So always mind that once you get into the trade, you put in your risks, your stop loss, to protect the account in case all the analysis you have done doesn't play out, you have your protection there to take you out before having a bigger drawdown. So as we can see here as well, we can see a W pattern formed here. A W pattern formed here. So it could be a beginning of a reversal, or anything can happen. Price is above the 20 moving average. So once it's above the 20 moving average is our trend guide. That is why we say if the 20 moving average is pointing downwards, we trade going downwards. If it's pointing upward, we trade going upward. So over here, as we can see, price has just crossed above the 20 moving average. So if we get a setup, we have this W formed as well, kind of confirmation for a turnaround. So if we have an event anywhere here, we could get into it. Other than that, you can wait as price makes its way down again, then you look for a setup or an event to get into it. Okay, Chris said we should check gold. Let's look at gold. So let's quickly pop into the higher time frame. Let's see where gold is at, just to give us a broader view of things. So currently gold was in this narrow zone, pushed up all the way to this high, being the wide states, and then pulled back to the moving average. So currently this is the daily time frame, and then you can see the dominant color currently is the green candle. The green candles. So we go back to our trading time frame. So on the 1 hour as well, we can see price was in the upward move. It was coming from this wide states. So from the wide states, it tends to be an upward move until it gets to the narrow state, and then it will decide whether to continue going up or continue turn around. So over here, price pushed up, and at the moment looks like it is in a wide state. This from this red line to to the blue line. Sorry. From this red line to the blue line, and then from the blue line to where price got to. So we have two spaces here. So when this happens, there's a likelihood that price will turn around, come back to the narrow state, and then continues. So we have a narrow state, a wide state at the moment on the 1 hour. Let's go to our trading time frame. Trading time frame. Okay, so 2 minutes time frame. So as we saw on the other higher time frames, price was above the moving average, pushing higher. So we can see price is above the moving average on gold, and it pushed down to form the narrow states. It's in the narrow states currently, So if it's continue going up, we should expect price to push up from here to the upside, because in an uptrend the narrow states is always rising, whereas the downtrend, the narrow state and the wide states also descending. So over here we can see that we came to a narrow state right down here, where price, the three moving averages are more or less together or close to each other. So from this point on, if you get an entry somewhere here, you could have be on this trade all the way up here. So here it's back in the narrow states. As we can see, price, the 200 moving average and the 50, they are here. So once we get a setup from here, we get an event from here, we can go to the upside. As we can see, it is in an uptrend. It is in an uptrend. So let's see NAS. So NAS is pushing up, giving us these two pin bars here, and then price was taking out, the green candle took out the last purple candle to the upside. So over here on our time frame, trading time frame, we haven't actually had an event that we can call out to be a clear one, apart from these ones here. So as I was explaining last time, if we get price trapped in between these two moving averages, the 20 moving average and the 50, because it's in a downtrend, this would be an ideal place to get into the trade as we get an event in this area. Any question, guys? If you have a question, you can pop it in the chats. So it is the same thing we do. You analyze it, analyze charts, and then you look out for an entry. And as we know, before we enter, we go through the tests that you look out for where price is priced below the 20 moving average or above. So if we want to sell, we look out for price to be below the moving averages. So now price is below the moving average. So that gives us a tick on the P, the position. And then the next question you ask yourself is price near the 20 moving average? That's the location. So if the location is not right, then it will not be an ideal time to enter the trade. So price has to, this purple candle has to be near the 20 to take the sell, and it has to be below the moving averages to take a sell. So that is an ideal condition. So once you have a setup here, you have an event happening here, then you can jump into the trade and then write it down. So you also have to look out to see which color is the dominant color here, which is the strong candles that you see. So looking at this one from here downwards, the dominant color we can see here is purple. So if the dominant color is purple, then that confirms our plan to take a sell from there. And also the next thing you check is the trend, the blue line. Is the blue line pointing down or sloping downwards, or is sloping upwards? So if you are looking for a sell, that means it has to be sloping downwards, but at the beginning from the narrow stage you might not find that confirmation. So if you get 2 out of 3, that is fine. That is fine to take a trade. That is fine to take a trade. So over here, if we want to take a counter trend trade, over here the price is above the 20 moving average, and then the dominant color, as we can see here, is the green candle. And we can also see that the blue line has started arching up, confirming the uptrend. And lastly, we can see this event happening here where we have the green candle taking out the high of this last purple candle. So with that said, with all this confirmation in place, we can take a counter trend trade here, which we put our stop below here, because we don't want to, in case it turns round against us, then we'll be covered. We'll be covered. We'll not get into too much drawdown. So it will be a managed risk. Managed it. So if it continues going up, then we will ride it to at least here, or if it keeps going up from there, we could trail our profits using our stop loss. So in that case, we'll just move our stop loss above our entry to trail our profits, to lock in our profits. So as price is moving higher and higher, we'll then be following it with our stop loss. So in case it suddenly turned back, then it will take us out of the trade with the profits that we have locked in. So currently it's looking strong, pushing up. It's looking strong, pushing up, as it's already in profits at the moment. As it stands, it's in profits. it's in profit as it stands currently. So all this happening is price moving back to the narrow zone, and if it wants to continue going up, then it will cross above the 200, then price will be above the 200, the blue line will be above the 200, and that gives us a ideal condition for buying. So this, as we took here, is a counter trend trade. So with this, you just have to be extra careful. Counter trend trade. So as we are in profit, I'm going to move our stop loss above the entry to lock in some profits. And just trail it as it continues going higher and higher. So as we are also expecting price to go in our direction, we should also consider what's ahead of us, what area is ahead of us, what zone is ahead of us. So we have the 17,550 key level here. So with that said, we might not have to expect too much, as price can turn around here and begin coming down. But if the momentum is strong, it could happen that it will break through to the upside. But nevertheless, you approach it cautiously, bearing in mind what could happen here. So with that said, if we see what's happened here, price was coming down with this big bear candles, but as it got here, it couldn't break through it. It pushed up and had to come back with a big candle to break through it. So as we can see, it got to this area. It's an area, it's not just this skinny line. It's an area, it's a zone. So if price gets here, it could reverse back in any time that it's, because where price has gotten to, looks like this is the same place. When it pushed down, came back to retest here and then push down. So there's a high probability that it will stop out here, or as I said, if the momentum is strong to push it further up, it will break through this area and go further up. So we'll see how it plays out. Whichever way, we have a stop there which is almost getting hit. We have our stop loss above our entry, so we are in a risk-free trade. So as price pulls back, yeah, it just took us out of the trade because it pushed into our stop loss. So at this point in time, if we get another entry, we could get into it. As I said, this is a counter trend trade, so you don't want to leave yourself opened. That's why I moved the stop loss above the entry quickly, should in case price is turning around to continue going down. Hi Molly, welcome. Hi everyone, welcome on board. So it looks like it's being held here by this area, which happens to be the 17,550 key level. Price is being held here. So from this point on, we just have to monitor it and see how we can. If it's coming down, we'll see. If we get a setup, we'll get into it. Other than that, if it pushes up, we'll find a setup and get into it as well. So guys, you see how we entered on this counter trend trade, and then it went up a bit and then pulled back to take us out of the trade on break even. So you just have to be very careful, because sometimes it will just push up a little bit. So in a situation, push up a little bit and then turn around. So in a situation where you have this move down, if I change to maybe, yeah, let's do a quick analysis on here. So where we have this big move down, what you could do is in this whole move down, you divide it into two. That's the halfway. Let me delete it. You do a halfway, looking at the distance from here down here. So you do halfway, that's the 50% level, and then you put another, you divide it again, you divide it again. So if price pulls all the way up here, so if the trend is very strong, it will most of the time pulls back 25% to this level. It can either pull back to this 25% level, or 50% level. %50 level, and then turn back. So it could be like this. As it got here, could get to 25 and then turn back down to wherever it wants to go. Or you could have another situation where price will come this way, turn around, make all the way to 50%. Then if you have a situation where price came down this way, moved all the way back to 50% of its initial move, and then you have price pushing down to this shallow move. If it doesn't come all the way down or make it below here, if it does something like this, then you have a trade going up. So as we can see, if we have something like this, so if it makes its way to the 50% level and pushes down to this low, not to the recent low, but somewhere above the recent low, then you have a trade going up in a reversal kind of trade. So let me change it to our 2-minute time frame that you can see exactly what I mean on there. So looking at this move, you can see that price pushed all the way to this low and then pushed up to the 50% level. So with this next push down, if it's not able to beat the previous record or equal to the previous record, this low, and then it gives us a setup here, then we have a trade going up. We have a setup going up. But if it does something like this, let me take this off. So price came from this high to this low and then came back here, and if it stops anywhere above this level, and then we have a good setup to go in for long or to buy, to go upside. So with that said, we have the 20 moving average here. So it could be that price will drop just below it, or the 20 moving average will hold it up, that it might not be able to drop below it. And then if you have a setup there as well, that's also an ideal situation to trade going up. Ideal situation to trade going up. So that is one scenario. So where we have something like this, price coming down, then goes to 25, then it's more or less going to continue the downward trend. More or less going to continue the downward trend, because with this said, that is telling you that the momentum going down is still very strong and powerful. The momentum going down is still very strong and powerful. Even though sometimes we also have this price coming here, and this happening, coming to test the previous low, and then it will shoot up again. Yeah, so these are some of the things that you can look out for. Then, you know, especially if you have something like this where price wasn't able to beat the previous record, this low, and then it stopped before this low, and then it gives a setup for the upside. You can jump into it to go, to ride with it to the north. Welcome, Trevor. Is it making sense, guys? So as we have here, we can see that with this move down, price has done about 50% retracement. So if we get this not pushing all the way to this low, and it gives us a setup anywhere above here going to the upside. We're good to get into it. So currently price is above the 20 moving average and being held above it by the blue line. So if we get the purple candle here taken out by the green candle, as it looks like happening now, we could go in for another buy. We could go in for another buy. So I'm just putting another one, even though the candle is not quite taken out yet completely. I kind of jumped in a bit early, so I'll put my stop loss here. If it works, fine. If not, I've got my protection there to take me out of the trade. So if it works, that means I get to into the trade at the right place I wanted to be in. So as I always say, when you enter a trade, you don't really know what will actually happen. So all that we are doing is just following the process, because we don't actually know what will happen. That's why we keep putting our stop loss to protect us in case something different happens apart from what our anticipation is. So it looks like it's dropping a bit below. So we have our protection there. If the reason why we entered the trade is no longer valid, we have our protection there to take us out before it goes further down against us. Okay, so with that said, today we're not going to stay on for a long time. We'll be finishing at 4:30. So before then, if you have any question, you can put it on the chat. Let's look at it. So as we do this, you go through whichever pair you are interested in trading. You go through it with the same process that we go through each time, we force the trade into the process, into the system, into the plan. So we have a plan that we are trading with. So whatever trade you have, or whatever trade you come across, you have to force it into the plan. It has to come through the plan. So if it's not coming through the plan, then it's not worth trading it, because we have to plan our trade and then we trade our plan. So if it's not fitting into the plan, we cannot trade it. Just as I was explaining earlier on, that if you do the test and it fails, then it's not a good trade to get into it. It's not a good trade to get into it. So guys, you can see that price is more or less turning around. Looks like it's taking out a green candle there. Yeah, it looks like this is a green candle. That price is just taking it out. But nevertheless, so long as we still remain in it, we see how it plays. Maybe it will just turn around and then continue to the upside. Or if it wants to go down, we then look for a sell setup to follow it down. As I said, this whole area, if you put in a buy in this whole area below the 200 moving average, even though price is above the 20 moving average, it's still a counter trend trade. So as I said, you need to be very careful, and then you have your stop in place, to protect your account in case anything otherwise happens. In case anything otherwise happens. So looks like we are back in profit now. So hopefully it runs up further to give us more profits. Does anyone have a question? Okay. Any question? Okay, guys. So on that said, have a nice rest of the day and enjoy yourself as you trade. Have fun, enjoy yourself as you trade and make some money. Thank you all for coming. Thank you for joining in. And I hope you found value with your time spent here. Thank you, thank you. You're welcome, welcome. So just monitor your trades if you are in it. Monitor it. And let's see you again next time. Thank you and bye.